This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. This is Rod from BTA, and we are known as the Middle Traders. What we're going to do now is a major index market update, the end of the day, okay? So this is the end of the day, 6/14/2022, Tuesday, 6/14/2022. And let's do an end of day of analysis of the major market indexes. Now, for the last 4 days, we've been selling off on the major market indexes. All right, if you go back and look at the last couple of videos we put up, we talked about the indexes breaking out of the sideways consolidation that they were in for almost 10 days. So where do we go from here? That's the question. All right, where do we go from here is the question. So what we have now is a daily chart of the Dow Jones. The actual index itself is what we're looking at right now. Daily chart of the Dow Jones. And this is our structural chart of the Dow Jones. So we are testing the previous lows support. We broke below it. We're testing it now. Are we going to be able to get back above it? Or are we going to trade down to this level right here, which I'm going to get to in a few minutes and explain to you what this is. But here is the prior support area from our previous low. Okay, we had this low here. We rallied up. This was our double bottom formation, if y'all remember. So we had the first bottom here. We rallied up, created the center point, rallied back down, had another bottom, which undercut the low of the first bottom. So that formed a pretty decent double bottom formation, right? And then we went into a sideways consolidation. So the last 4 trading days, we traded down very hard, and we testing this low of the double bottom right here, okay? The lowest low of the double bottom. Now we're testing it. So we put a horizontal support level here, which is now acting as resistance, and we broke through it yesterday, and we closed right on this other horizontal support level right below it, okay, at 30,504. Now today we opened up right on the prior bottom, the horizontal support level, and we closed below both of them today on the actual Dow Jones Industrial Average. So we're below support. Okay, we broke below support and we closed below the support level. So now the question is, can we get back above this level? Start trying to test this overhead internal upward trending trend line right here. If you notice this internal upward trending trend line right here going across these here. Now, can we get back above this prior support, which is now going to be trying to act as resistance, and get back above this trend line and break above this prior support, which is now resistance? That's the question. Well, that's what we need to see from the Dow Jones Industrial Average, right? But if we can't get back above this resistance area and we trade back down, I would not be surprised if we don't come down to this very thick horizontal red support line that you see right here. This horizontal line is going back to the March 2020 highs. This is the high level of the March 2020 levels, okay? That's what that red line is. I'm going to minimize this all the way in so you all can see it. And you're going to see that's going back to the March 2020 highs. I'm going to tighten this up, bring it all the way in. Okay, I'm bringing it all the way in so you can see. Look right here. You see, this is the March right here, this area right here. This is the March 2020 highs, right before we had the corona collapse. That's what this red horizontal line is going back to. We are now trying to get down there. All right. We got a lot of little consolidation areas right in here, a lot of price action here that can act as support. Okay, right in here. If you notice, right here, that can act as support. Okay, and maybe the market can hold in that area and then bounce. But I would not be surprised. Okay, we got a lot of news coming out with the Fed on tomorrow at 2 o'clock. They're going to make the decision on interest rates. I would not be surprised, okay, if they do something to shock the market, that we don't trade back down to these March 2020 highs right here. This very thick red horizontal support line right here that you see. But I'm of the notion that the market could rally off of the Fed. You know, the Fed just keep pushing interest rates up. You never know if the market takes that as good news and starts to rally. And one of the things I'm seeing is a lot of divergences right now. I'm gonna do a video on, we have divergences all over the place. Okay, bullish divergences and bearish divergences, right? So we're gonna discuss that. I'm gonna do a video on that shortly. But right now, we got to see if the Dow Jones Industrial Average is going to get back above this price support area, break back above it. It's trying to act as resistance right now and get back above that upward trending internal trend line. That's what we want to see. All right, that's what we need to see in order to think that maybe that index is trying to get a little more constructive and maybe try to rally back up. But remember what we did earlier. We did a video talking about those 5-day moving average, 150 week moving averages. Don't ever forget that. We don't want to try to buy anything that's below a 5-day downward trending moving average, right? Okay, so this is a daily chart of the Standard & Poor's 500. A daily chart of the Standard & Poor's 500. And once again, we had that double bottom pattern. This is the middle of the double bottom pattern, right? That's the pivot, the high point of the mid area. But here we had the consolidation and then we sold off. Okay, we broke below the low of the consolidation. Volume was coming in. We sold off, right? Last Thursday was the beginning of that sell-off. And once again, congratulations to everybody who caught the move. But here is the low of that double bottom pattern, the second low. We have a horizontal support level right across that. Well, we broke below that yesterday and we traded below it today. Okay, we're below this downward trending trend line. We have to be very careful. All right, it's a possibility we can trade back down to here. Okay, because now we're getting back into this consolidation inside of this downward trending trend lines, which was acting as fans. Those are our internal trend lines, the fans. We're starting to get below all of them. Okay, and now we're below this horizontal support level here. We have to see what happens. We need to see this index, the Standard & Poor's 500. It's the actual index itself. We need to see it trade back up, get above this downward trending trend line, and get back above this low area, okay? This low of that double bottom. Get back above there and back above where we got this horizontal support level, which is now acting as resistance right at the low of that double bottom, okay? We need to get above that on the Standard & Poor's. That's around 3,800. 3,810. 3,810 is what we need to see it get back above. Right now we at 3,735. Talking about a little over 100 and something points, maybe 100 points, right? So we got to get back up to 3,810. Now, let's go and look at the Nasdaq. Okay, let's look at the Nasdaq. Let's look at the Nasdaq. All right, here's the Nasdaq. And let me expand a little bit so you can see it. So look at the Nasdaq here, okay? The Nasdaq is back below its prior low of its double bottom formation. Here's the low right here. We put a horizontal support level right across that, and we broke below it. That's this yellow line you see right here. This yellow horizontal line is going right across these lows. Well, we opened below it and traded below it yesterday, and we continue below it today, even though we closed up slightly in the Nasdaq Composite today. This is the daily chart of the Nasdaq, the actual index itself. Well, we closed up a little slightly up today on the Nasdaq Composite. Well, we got this downward trending internal trend line right here that we're trading below, and we're trying to find resistance there. That's key. We need to get back above that. So if we stand below that downward trend internal trend line and below that horizontal support level, okay, which is acting as resistance right now, well, that's a major problem. We could come back down here and test this level, which is 10,519 on the Nasdaq. But right here, once again, look at this real thick red horizontal support level. That's going back to the highs. Once again, when you see this really thick red line on these major index daily charts, that's the high of 2020. Look, it's possible. Okay, it is possible. We have to look at the charts, we have to monitor charts and let the charts be our guide. But it is possible that it can go back to this. Don't ever think it can't trade back down to there. We are in a bear market, you know. Okay, did you hear me? Did you hear what I just said? We are in a bear market, you know. All right, we're going to have some relief rallies in here, some upward trending relief rallies. We're going to have some upswings in a relief rally, but we are in a bear market, you know. Okay, so all right, don't say I didn't tell you. We are in a bear market, you know. All right, so with that being said, we can come back and test those highs of 2020. Make no mistake about it. But if we do get a relief rally and it start trading up, I told you, I still believe that we're going to go back to the high of the inverted yield curve, okay, somewhere near there. And then we're going to get the recession, and then we're going to get the major collapse, the mother of all collapse, the real collapse, okay? And at that point, look, how low can we go? Nobody knows, all right? You just better watch the charts. Keep your eye on the charts because it can fall completely apart at that point. When the recession hit, we are going to get a major collapse, point blank and period. But for right now, let's see if we can get back above this downward trending trend line, get back above this horizontal resistance area right here, the yellow line, okay? Get back above this horizontal resistance level right here, get back above this downward trending trend line, and kind of stay away from these here prior lows back here. And these are weekly levels, by the way. These red lines, remember, the red lines are all our weekly levels, right? The yellow lines are the daily levels. We're on the daily chart of the Nasdaq. But we could come back and test some of these long-term weekly support areas. Well, hopefully we don't break them. Hopefully we don't even test them. Let's hopefully think that maybe we can get back above this downward trending trend line and get back above this overhead resistance on this daily horizontal overhead resistance level that was prior support. We need to get back above all of that. All right. And don't forget, I keep repeating myself, you got a downward trending 5-day moving average. Okay. A downward trending 5-day moving average. We don't want to trade against a downward trending 5-day moving average. Here's our moving average charts for all the major indexes. Okay. Look, this is going to be fast. Okay. We don't have to do too much with this because it ain't nothing to look at. When you're in this position, it ain't nothing to look at. Okay, don't get yourself in trouble as far as I'm concerned. Here's a downward trending 5-day moving average. As long as prices is below this downward trending 5-day moving average, I'm not going to trade against that. The 5-day, this white line is the 5-day moving average. That's our short-term momentum moving average indicator. When that thing is pointing down and prices are below that, look out. The short-term momentum is to the downside. I'm not buying against that. So until we get above this 5-day downward trend and 5-day moving average, it's not much to think about, okay, as far as I'm concerned. So, and now we got this yellow line, which is our 21-day moving average, and the green line, which is our 9-day moving average. They're all pointing down. And we've been talking about this downward trending 50-day moving average that acted as support and held this consolidation. We was trapped between the downward trending 50 and the sideways 21-day moving average. And you saw what happened. It broke below the bottom of the consolidation, found resistance at the downward trending 50, broke below the 21-day moving average, broke below it, volume came in, and you can see we went on a collapse for the last 4 days. Well, we saw it coming, okay? We saw it coming. So So that's the Dow Jones with our moving averages. Let's look at the Standard & Poor. Like I said, this is not going to be long. It's not much to look at because look, we are below a downward trending 5-day moving average. And when that's the case, it's nothing to think about. Okay, you buying a stock that's below a downward trending 5-day moving average is a recipe for disaster, as far as I'm concerned. It is a complete recipe for disaster, as far as I'm concerned. Okay, I repeat. Did you hear what I just said? It's a complete recipe for disaster. All right, so here is the downward trending 5-day moving average. Here is the downward trending 9-day moving average, the green line. And we got the 21-day moving average, okay, that was once acting as support. It is downward trending and it's sideways and curving down now. And the 9 is about to cross below the 21, okay? The 9 is about to cross below the 21, all right? We call that our bronze cross, when the 9 crosses below the 21, okay? Our silver cross is when the 21 crosses above or below the 50. Okay, and our golden cross or death cross is when the 50 is above or below the cross above or below the 200-day moving average. So right now we're about to get a bronze cross where the 9 is crossing below the 21-day moving average. Right here, it's trying to cross, and it's trying to cross below. That is, I'm sorry, that is a sign of momentum going to the downside. Excuse me, take a little drink of water. That's a sign of momentum going to the downside. Be careful. The 5-day moving average is trending down. Watch out. Okay. So let's go on down to that's a daily chart of the Standard & Poor 500. Let's look at a daily chart of the QQQs with our moving averages. All right. Let's see what it looks like. And by the way, don't forget. Let me expand this. I might have forget to mention it on the Dow Jones, but it looks the same as the Standard & Poor. I think I did mention it. You got prices coming down, and look at the volume expansion. Higher volume, okay, on down days is a sign of distribution. And then we also getting above average volume on these down days. So that's definitely a sign of institutional selling. The big boys are selling. See, you got a down day with higher volume than the previous day. That's distribution. That's signs of institutional selling. And it is above average. Well, look what's happened when we was consolidating. On these up days, we had very low volume, okay? On the down days, volume was higher and expanded. Well, when the sell-off hit, I look at the volume expanded. We talked about that. If it break above or below that consolidation that was in for the last 10 days, all right, before the breakout, we talked about it. If it breaks above or below the consolidation, we need to see the volume come in to confirm that the large institutional investors are behind the move or they're dumping it. And okay, so we've seen that. Now let's look at the Nasdaq. This is a daily chart of the Nasdaq. Okay, the actual index itself, the Nasdaq Composite, right? So let's expand it and see what it looks like. But it's not much to talk about. Okay, we got a downward trending 5-day moving average right here. This white line is a downward trending 5-day moving average. Now you see also the green line has now crossed below the yellow right here. We got a silver cross, but they both are pointing down. The 9 and the 21-day moving average are both pointing down, but the 9-day has crossed below the 21-day moving average. Okay, the green line is crossed below the yellow, and that's our bronze cross. I'm sorry if I said silver a few minutes ago. That's our bronze cross. Okay. That is a bronze cross. That is a sign of momentum heading to the downside. We need to see that change. Okay, and there's one more thing. Now, look at the volume. Okay, look at the above average volume on these down days when it's sold off for 3 days. Look at above average volume. Now, it's something that I need to bring up, and I need to go back, okay, I don't need to go back because, as you can see, we already talked about the Dow Jones had a down day today. The Standard & Poor had a down day today, right? But look at the Nasdaq. It actually traded up just slightly today. Well, it traded up slightly, right? And not much. And the volume was low. But we have to move this white line over here and move this over because that is, it's not that great of a day, but that is a sign of a first day rally attempt right here for the Nasdaq, okay? So this is the first day rally attempt. So today is Tuesday. So we can ignore day 2, which would be Wednesday, day 3, which would be Thursday. Actually, on the Nasdaq, come Friday, we can get a follow-through day. Okay? Technically, that's how the count works. We can actually get a follow-through day on Friday on the Nasdaq Composite. Okay? Let me expand this so you can see it. It is an update today. Okay? We market in correction. Okay, market is in correction. The trend is down. We got an update today. Okay? We got an update today. That's the first day rally attempt. We got to ignore, today is Tuesday, so we got to ignore tomorrow, which will be Wednesday, right? We got to ignore Thursday, okay? So Friday will be day 4, and that's the follow-through day. From day 4 and beyond, we look for our follow-through day. So actually on Friday, we can get a follow-through day on the Nasdaq. Now, what's interesting about that is Friday is triple witching day, okay? It's going to be a lot of volume on Friday, okay? Because that's option expiration day. That's when those index options, commodity options, they all expire, okay? And they got to be they got to reallocate money to the next options, okay, on Friday, okay? So all of these options, okay, and most of them are put options, all right? Most of all these options are put options, okay? They are expiring on Friday. And that's the same day that we could possibly get a follow-through day on the Nasdaq. Understand, hear me what I'm saying to you. Are you digging what I'm saying to you right now? Friday is option expiration day. Actually, on Friday, we can get a follow-through day. The options is triple witching day. The options are expiring. Those commodity options, those stock options, those index options, they are all expiring on Friday, and they got to be reallocated. Are they going to go to the long side? Because the majority of them are short. Listen, I'm telling you, it's going to be a lot of volume on Friday. It could be a follow-through day. Now, I hope you're digging what I'm saying to you, all right? It's a possibility. It's mighty interesting that it's setting up for Friday to be a follow-through day, and that's option expiration. We know it's going to be a lot of volume. It's going to be a wild trading day. It's going to be a lot of volume. Okay, let's look at the IWM. Let's look at, I hope you heard what I just said to you. Let's look at the IWM, okay? Here's the IWM. It's not much to talk about. We got a downward trend in 5-day moving average. We got a downward trend in 21, the yellow line, downward trend in 9-day. Well, the 50-day moving average with the red moving average line has been trending down all the time. There's nothing much to talk about. You see the volume expansion. Today we had a down day. The volume was a little lower, so there's no distribution. But at the end of the day, we're below a downward trend in 5-day moving average. It's not much to talk about when you're below a downward trend in 5-day moving average, okay? It is not much to talk about. Now, let's look at the guppy. This is going to be fast also. You see the magenta line of closing prices, okay, has fell completely apart. It's well below, okay, the red faster moving averages and the green shorter term, the red longer term moving averages, the red longer term moving averages and the green faster moving averages. Here's the red longer term moving averages. Well, we told you that this magenta line of closing prices right here may find resistance and some turbulence inside of these downward trending longer term red moving averages. We told you that when the market was consolidating sideways. Well, it fell apart. And you see the magenta line broke, came out of those longer term, found resistance in the longer term red moving averages. The shorter term moving averages twisted to the downside, and now they're expanding. And the magenta line of closing prices are well below all of the short-term green moving averages and the longer-term red. This is for the Dow Jones Industrial. Well, you see it, okay? We got to see that change. You need to see this magenta line get back above the green, shorter-term, faster moving averages first, and then try to get above the longer-term downward trending red moving averages. So the same thing here for the Standard & Poor 500. Okay, the Standard & Poor 500, it's the same thing. You got the magenta line of closing prices is below the faster and the longer term red moving averages. Okay, you see that. It found resistance right at the longer term red moving averages, and now it's below all of the shorter term green moving averages, and they flipped and they expanded to the downside. And you see the magenta line of closing prices are well below it. It found resistance inside of the longer term red moving averages. So for the Standard & Poor 500, we got the same problem. We need to see this magenta line of closing prices get back above these shorter term moving averages first, and then try to get back above those longer term ones, right? That's what we need to see. Now, let's look at the Nasdaq Composite. All right, let's bring the Nasdaq Composite up. Here's the Nasdaq Composite. All right, we got the magenta line of closing prices. Here's the daily chart of the Nasdaq Composite. We got the magenta line of closing prices well below the faster, shorter term green moving averages, and they're below the longer term red moving averages. You see that, and everything is pointing down. The magenta line of closing prices found resistance at those longer term red moving averages up here, and it broke below the shorter term green ones. The green ones flipped to the downside, and they starting to expand. And you see the magenta line of closing prices are below everything. We need to see it get back above these shorter term green moving averages. See if we can finally get above those longer term, slower red, downward trending red moving average. So the guppy is telling you the trend and momentum is definitely to the downside. Now, we back in bear market territory as far as breadth is concerned. I told y'all before, don't get the fear of missing out. This chart here is the percentages of stocks in the total U.S. market that's above their 200-day moving average. And right now you can see it's only 13% of the total U.S. market. Only 13% of the total U.S. market is above its 200-day moving average. Well, we're back down here. We're below 15. We're back into bear market stuff. This is extremes. This is bad, okay? We're back into bear market territory. The percentage of stocks above its 200-day moving average in the total U.S. market is down at 13. That's bear market territory. It's no ifs, ands, or buts about it. We got to see that improve, okay? Only 13% of the total U.S. market is above its 200-day moving average. And what did Paul Tudor Jones say? Don't ever forget it. Hear me now. Are you listening to me? Can you hear me? If a stock is below its 200-day moving average, Paul Tudor Jones said, I'm not buying. I'm only going to be going short or sitting on the sideline. If a stock is above its 200-day moving average, then I'm buying it and I'm not going short. So in other words, he's trying to tell you when the stock is below its 200-day moving average, the trend is down and it's a problem. As my mentor said, it's a problem. We got a problem, Sherrod. Problem, son. Okay? So here's the percentage of stocks above its 200-day moving average for the Standard & Poor 500. It's at 14%. Only 14% of the Standard & Poor 500 is above its 200-day moving average. Bear market stuff. Bear market stuff. Okay? If you ain't hear me, make me stutter. It's bear market stuff. All right? So if there's a bus about it. Now here, this red line is the 40 level. When 40% or less than 40% of any of these indexes is less than 40% of stocks is above their 200-day moving average, we are in correction territory. Trouble. Watch out. Be careful. That's the red line. We now are down here at 14%. There is no reason for you to have FOMO, fear of missing out, because it ain't nothing to fear. If this market is going to turn, you still got over 80% of it that needs to get above its 200-day moving average and go on a run. I'm telling you, we are in bear market stuff here. So it's nothing to worry about. The breadth is telling you it's a whole lot of stocks that got to start moving before this thing is over, okay? If we are to get any kind of rally, it's a whole lot of stocks that need to start moving. Now here is the Nasdaq, percentage of stocks above the Nasdaq, only 12%. We're back down into these bear market territory, these extremes. Look at this. We're back to the extremes. Only 12% of the Nasdaq is above its 200-day moving average. Look here. I don't know how to tell you. This is bear market stuff. 40% is the level to watch out. When less than 40% of any one of these indexes above their 200-day moving average, that's when we say, be careful, red light, get ready to stop, watch out. The market is starting to turn down, go into correction. Well, we at 12% now. These are extremes. We don't see these levels too often. Only a couple of times every few years. We are at extremes. Only 12% of the Nasdaq is above its 200-day moving average. That's the bottom line. Now, let's go straight to the Nasdaq. Well, we can look at the Standard & Poor's. But as you can see, up top is the number of stocks hitting new 52-week highs. Okay. Up here, the number of stocks hitting new 52-week highs is up here. Number of stocks hitting new 52-week lows. Well, you can see way more stocks hitting 52-week lows than 52-week highs over the last 3-4 days. Okay. So, bottom line, stocks are still hitting 52-week lows. If we go to the Nasdaq, you can see right here over 1,000 stocks today alone in the Nasdaq hit new 52-week lows. Okay. If I expand this, you can see it right here at the bottom here. The bottom histogram down here is the number of stock hitting new 52-week lows. The upper histogram, the number of stock hitting new 52-week highs. Only 15 stocks today hit 52-week highs. Over 1,000 hit 52-week lows today. The Nasdaq still have stocks that's still selling off pretty hard. Okay, they are still hitting new 52-week lows. There is no ifs, ands, or buts about it. The Nasdaq still got a lot of stocks hitting 52-week lows. No reason to fear. We ain't missing out on nothing. If this market is to get legs, it's going to show up. Now, our number one breadth chart of all time, the undefeated, undisputed champion of breadth. This is it right here. The Dow Jones Advanced Decline Invisible Chart Differential has never failed us yet. I should not say that. It's well over 90%. It hits. You ain't got to worry about that. It's the majority of the time, it ain't going to fail us. When we get that little green arrow, that's our sign for to start looking to start buying stocks. When we get a little green arrow. But the green line is below the red and the yellow line and below the zero line, this horizontal red line. No go. It ain't nothing to start buying. The breadth is not there. Anytime the green line is below the red and the yellow, the green line below the red and the yellow and below the zero line, there's nothing to talk about. We ain't got enough breadth in there. The advancing minus declining stocks invisible differential chart is telling you that you should not be trying to buy right now. It ain't good. We don't have a green arrow. So this is the Dow Jones Industrial Average. You can see the green line is well below the red and the yellow and is well below the zero line. Watch out. There's nothing to think about. You're not going to see this chart anywhere else by anybody else, anywhere on the index. You know why? On the internet. You know why? Because I created it. Okay? That's why you ain't going to see it nowhere else. If you do, they stole it from me. Okay? So now look, here's the Standard & Poor's 500. The same advanced decline issues, advanced and minus decline issue, differential, invisible chart without moving averages on there. Okay? Guess what? You see it. The green line is now below the red and the yellow, and it's below the zero line. And the yellow line is getting ready to cross below the red. Listen, there is no breadth here. There is no breadth here. We do not have a green arrow. This is a sign of trouble. We need to get the green line to get back above the red and the yellow and get back above the zero line. And then we need the red and the yellows to start turning up and at least to get back above zero. We're going to generate that yellow, that green arrow, okay? And that's when it's going to be our signal to start buying. But until then, it could be very dangerous because the breadth is not on your side. In other words, it's more stocks still going down than going up, okay? and that's the breath. That's under the hood. Be careful. Look, you saw that major market swing signal today with Lois. You saw it this morning. I put it up. For the first time ever, everything, we had 0 stocks in a bullish upswing. 0. Not one. Since we created Lois. Okay, since we created Lois and been monitoring, we had never seen it that bad. I'm wondering if today anything is going to be in the beginning of a bullish upswing. And I can tell you right now, none of the major market indexes are there. Not one of the major market indexes, not one of the ETFs, sector ETFs, other ETFs we watch, nothing is in the launch of a new immediate upswing. Not one. We have never seen that before from Lois. So that's telling us something. That was new. Okay. It was really bad the last couple of days. 0 stocks are in the launch of a new immediate upswing according to Lois. 0. 0 stocks in the Dow Jones. 0 stocks in the Standard & Poor's 100. 0 stocks in the Nasdaq 100, which is technically the QQQ, the triple Qs, right? The Nasdaq 100 is the triple Qs. No stock was in the launch of a new immediate upswing, according to Lois. None. And when you combine all the largest holdings of all the major index ETFs, mutual funds and everything, the largest holdings, it's over 180 stocks. Not one, 0, was in the launch of a new immediate upswing, according to Lois. Go back and look at the article that I put up. I'm telling you, never seen that before. So that's interesting. Let's see. I'm interested to see which stock is going to be the first one. Which ETF, major sector ETF, major index ETF, which one is going to be the first one to give us the launch of a new immediate upswing? Who is going to be the first? That's what I'm interested to see, or what's going to be the first couple. And you know what? When that happens, I'm going to give you a list of those stocks that finally, the first, the pioneers of the new immediate upswing. All right, here's the green line. All right, it's pointing straight down. It's below the red and yellow, and it's below the 0 line. It's no green arrow. It's nothing to talk about. The breath is not there. We have no signals to start looking to buy stocks. We do not have a follow today. Follow today has failed. The rally is dead. We are the first day rally attempt for the Nasdaq. Nobody else gave us a first day rally attempt. You've seen it here. That's it. Basically, to sum it all up, be careful. This ain't no time to be trying to get courageous. If you missed the short pivot on Thursday to bet against the market, it's well too late. We have to now look, as far as we're concerned, over here at BTA. Remember, we don't give financial advice. I'm just telling you the way we look at it. And we look at it with our good eye. Okay? I'm trying to tell you, we looking at it with our good eye. And congratulations again to everybody that got that ching, ching, ching last week. Okay? All right. So until the next video, to sum it up, be careful. We below all the longer term and short term key moving average on the guppy. We below a downward trending 5-day moving average. We below the market breadth is at all-time lows. Our advanced decline differential chart, invisible chart, is telling us to be careful. We below key support levels. We broke below it and we below it. We testing internal trend lines. All summing up to say, be careful. This is not the time to get courageous as far as we're concerned. This is not the time to go long. Lois is telling us that nothing, and I'm not going against Lois because Lois will lead you to success. She's saying not one, there is no one in a bullish upswing. See you in the next video.